everyone. My name is Moonshine, and I'm the host of today's AMA with Synfutures, which is a leading decentralized exchange and full stack financial infrastructure provider. Today, we are going to dive into how each and everyone can utilize its innovative AIM model and a fully on-chain order matching engine. We have Tony here with us on the mic. He would be the one presenting for the team from Synfutures. So welcome once again, Tony. And to start with, can you kindly introduce yourself and the team behind Synfutures?
Yeah, hi, thank you for having me. I'm Tony. I'm the global BD lead at Synfutures. Synfutures has been around since 2021, actually. It's more than 30 of us in the team. We have a mixture of DeFi natives, but also people coming from TradFi, and really a very strong blend to build out what we want, which is to be a full stack financial infrastructure platform for DeFi. So yeah, the V3 of our protocol was launched in March of last year when we went live on Blast, and we've since migrated to Base in July of last year. We do between 70 to 80% of the derivatives volume on chain on Base daily. So that can be anything between 200 million to $1 billion in daily volume.
Interesting, really interesting. So I think to start with, could you elaborate on how the Oyster AMM integrates the on-chain order book with the...
Yeah, of course.
Okay, go on.
Yeah, it's so the Oyster AMM is really one of the key parts of Synfutures. It's one of our main differentiators. So the Oyster AMM model integrates a fully on-chain order book with a concentrated liquidity AMM model by unifying what would be limit orders and the concentrated liquidity within a single model. So what that means in practice is if there's a limit order at a specific price tick, the order gets filled by the limit order. Otherwise, it gets filled by the range liquidity. What this does is it allows us to have a fully on-chain system. So that provides further transparency than you would get with hybrid systems or with centralized exchanges. And it also is a highly capital efficient system. So it enhances the liquidity concentration. And if you think about what concentrated liquidity can mean with this for derivatives, unlike traditional AMMs where liquidity is distributed across an infinite price range, the Oyster AMM allows liquidity providers to concentrate the liquidity within specific price bands. So that ensures deeper liquidity at the most relevant trading prices, and as a result reduces slippage for traders. On the other side as well, mentioning the on-chain order book, obviously AMMs they're useful because they distribute liquidity across a curve, but the order book model efficiently concentrates liquidity around the mid price, and so combining the limit orders with the AMM model really provides a top trading experience for on-chain traders.
Interesting to see how the system is integrated to ensure that traders have better chances at trading on your platform. So I see that this platform allows users to list on any trading pair permissionlessly within 30 seconds. So could you provide details on the security measures that are in place to prevent the listing of malicious or fraudulent assets? Do they go through some kind of KYC? Is there like a mini audit in the ecosystem that they have to pass through or something?
Yeah, so it's a great question. As you've just pointed out, the platform does allow users to trade any pair permissionlessly. and list any pair permissionlessly even. So we're similar to Uniswap in that respect. That said, because we're early in our protocol's life cycle, we have until now, helped projects that want to list their derivatives pair on Synfutures, and so we've vetted those projects. That has had there are two sort of results of that. One, that our users have access to what we determine as safe assets, and also the protocols that are, the projects that are listing on Synfutures, have sufficient liquidity and are sort of executing in the right way when they come to listing. We have developed what would be a proprietary solution for early stage assets in terms of oracles, which we've just called an emerging oracle. So that's used when external oracles like Chainlink or Pyth are unavailable. And so in order to ensure that a good trading environment can be provided for those assets, a minimum amount of liquidity is required to facilitate the trading of that asset. And that combined really with what would be the capital efficiency of the Oyster AMM ensures that there's sufficient liquidity for newly listed assets.
Interesting. I think is Jerry from your team?
Jerry is from my team. I don't know if he's
He seems to be raising his hand. Hi, Jerry. I just wanted to be sure if he wanted to jump on the mic because I saw his hand raised, which is okay. So, okay, Jerry, you wanted to say something?
Sorry. So I had an issue. I couldn't hear you guys speak. So, it's okay. I can hear you now. Yeah.
Okay, it's okay. Thank you so much. So, thank you for answering that question. Now, you're going to have a lot of a lot of newly listed pairs coming into your platform, especially if the a way to enter is their way is quite transparent and you guys offer it seamlessly. So I want to know, how do Synfutures ensure sufficient liquidity for newly listed pairs, especially those that might be less popular or have lower trading volumes?
Yeah, that's a great question. So if you think about what Synfutures is, right? We're not like Uniswap, for example, in that we are not a swap trading platform. So we don't users won't come in to swap, let's say, wrapped ETH or USDC for an asset. Rather, they are trading a derivatives pair for it. So what that really means is that they're trading a perpetuals contract of the price of that asset. And so for that, what we need is a good price feed, right? And as I mentioned, we've developed the emerging oracle, which is basically a proprietary solution for emerging assets that don't necessarily, when we don't necessarily have access to external oracles such as Chainlink or Pyth, to facilitate what would be the correct pricing of those assets, right? But for what would be Synfutures to be able to list an asset and for that to be traded well on Synfutures, it needs to have sufficient liquidity on the pool that it's tracking in terms of the price, right? So, say an asset is listed already on Uniswap. If that there is sufficient liquidity in that Uniswap pool, then we will be able to do a good job at creating the perpetuals pair. One thing we haven't really touched on just yet, which is a very interesting feature of Synfutures, is that we have a single token liquidity provision, right? So if you think about, I go back to Uniswap v3 because that's probably what a lot of you folks are familiar with. When you're providing liquidity in Uniswap v3, you have to provide, both assets within the range, right? If you provide outside the range, then you can provide with one asset. But the way that liquidity provision works on Synfutures is that you provide liquidity using just one asset, which would be the asset that is used for margin for the pair, right? So as an example, for the BTC USDC pair, the asset that is used for collateral and hence for liquidity provision is USDC. But for what would be smaller tail assets, say we have Moonwell also listed on our platform, so the token as well. You will notice that the collateral asset and the margin asset for that is well the token, right? Now, what that means is that because it's not USDC and because it's well, which is the project's native token, it means that often that's a very low barrier to entry for projects to be able to list their own perp pair, right? Because you don't have to front up USDC, but you can front up your own project's token. And so as a result, you can create a very good trading environment from that because you have deep liquidity with project's token. And so yeah, that's essentially one of the ways that we allow early stage projects to list their assets in a low cost manner. Just to note on that front that currently for assets that want to do that, they would have to be natively on base. So we don't at the moment support assets that want to use their own project token as collateral that aren't on base.
Really interesting. The fact that you have you thought about how to actually efficiently help these new listed pairs is interesting. Thank you so much for answering that question. I think the other part of it that I wanted to ask was about the automated liquidator. So I want to know, how does this actually differ from traditional third-party liquidators and other DeFi platforms? What role does it actually play in signatures?
Yeah, that's a great question. So liquidations work in the following way in Synfutures. When the margin support for a trading position falls below its maintenance margin requirement, the position is subject to liquidation, right? So what that means is that, in most decentralized margin trading systems, liquidation in the Oyster AMM is performed primarily by the taking over approach, where the liquidator takes over the target trading position along with the remaining margins and tops up the margin to meet the initial margin requirement. So what that means effectively is that the remaining margin of the position is a potential profit for the liquidator, if obviously the liquidator can manage the risk, right? So that's essentially the way that liquidations work. Now, in addition to that, the Oyster AMM also allows what would be a liquidation mechanism where trading positions that fail the maintenance margin requirement are also forced to trade against the Oyster AMM directly to close the position, right? So if there isn't like a third-party liquidator, it would it would be traded and forced to trade against Oyster AMM. And so, that two-pronged approach means that liquidations happen very efficiently on Synfutures, and both approaches also support partial liquidation. So where the initiator specifies the amount of position to be taken over or forcibly closed, right? So again, really we sort of with all these systems to create the best possible trading environments for people coming in to trade fully on chain and not have to necessarily rely on centralized exchanges for trading these assets.
Yeah, I appreciate your transparency. So now moving on, I think one unique feature that you guys have is that you support trading of cross-chain assets. As much as we know so many risks that would be associated, how would these be implemented, and how does the platform manage these associated risks, such as those related to the cross-chain bridges?
Yeah, that's a very good question. So just to be clear, so Synfutures is currently deployed on Base. So we do support derivatives trading of assets on other chains, but this is not the same as cross-chain swaps, right? So for example, with the BTC USDC pair, obviously BTC is its own, Bitcoin is its own chain, right? And we're not at any point relying on any form of cross-chain swaps. Rather, we're taking what would be a price feed, and so we're setting up the derivatives pair for that, right? So as a result, there are no risks related to cross-chain bridges as assets aren't being moved across other chains. That said, when we are setting up like a derivatives pair for an asset, as I mentioned earlier, if a project wants to their project token to be used as the margin token for the pair, then the token would need to be on Base, right? So as I mentioned earlier, Well it's an instance of that. But a project, say, if we wanted to list Solana, like a Solana perpetual tomorrow, we would also be able to do that. It's just that USDC would be the collateral asset for that, and that would be on Base.
Yeah, thanks for that clarity. I think that was very, very important to note out. Thank you so much for bringing that out. And okay, I think I just want to know, are there any specific security audits that have been conducted on Synfutures? And you could just walk us through some security measures like the audits, if you guys are KYC, the kind of badges you guys have currently.
Yeah, so obviously audits are a critical part of any DeFi protocol because people are interacting directly with smart contracts as opposed to the setup which would be in a centralized exchange where users are essentially trading in a closed system. And so, yeah, security is really a top priority for us. So all of our protocol smart contracts have been audited. We have audits for the V3 Oyster AMM for derivatives. We have Launchpad Vault, which has also been audited. And both of those have been audited by OnStamp. Our spot aggregator, which we recently launched. So we haven't talked about that yet. I'll go into that in a bit more detail. But that's been audited by PeckShield. And they did find a few low severity findings, so nothing that was high or medium risk. And those have since been addressed. And yeah, talking a little bit more about our spot DEX aggregator. So, beyond the perpetuals DEX, which is where Synfutures really started, we're building out further products. And one of those is the spot DEX aggregator, which we launched in the last month or so. What the spot DEX aggregator does is it aggregates liquidity from the top spot DEXs on Base. So a large amount of that of that liquidity comes from both Uniswap and Aerodrome, and we essentially allow users to perform trades with the best slippage, right? So we route the trades so that they get the best prices at the end. as we grow further, we're going to be developing more products in that space. And a few months back as well, we launched Cynthia, which is an AI agent. So that's the first product we're launching in what will be a whole AI agent framework that we'll be building out over the coming months. Cynthia is really interesting because essentially uses all our technology that we built out in the back end, and so it allows users to quote what would be Cynthia on Twitter. So if you tag her in a Twitter post and say at Cynthia, please swap 500 USD for ETH, and it will do that for you sort of automatically. That at the moment is only rolled out on base as a feature, but yeah, we'll be growing those features further as well.
Interesting. I appreciate the fact that you also touched on the aggregator that was just launched, and just a very unrelated question. I always get curious how these AIs are named, like the Cynthia AI. So is it like from Syn, obviously from your name, Synfutures, right?
Sorry, that cut out for me a little bit. Could you repeat that question, please?
Okay, am I clear right now? Can you hear me now?
Yeah, I can hear you good now.
So I was saying, just an unrelated question. I'm curious how these AIs are named, like the Cynthia AI. So I'm just saying, so Cynthia, is it like from the Synfutures, correct?
Yeah, so Cynthia, exactly. We wanted to find something that was related to Synfutures in terms of the naming, and that would be cohesive with the rest of our brand. And we've also seen that there's a general trend for these bots or these AI agents to be to have some sort of like female character around them. So we had a few names on the whiteboard, and Cynthia ended up winning out.
Nice. uh, the fact that it's quite unique caught my attention, and just because you mentioned that, so I wanted to ask, like you said, okay, it's going to be an X, you have to speak to it, like to swap some, some tokens. Thing. I want to ask the language aspect of it is something you guys have also thought of, because I'm sure you guys would like to go global, and we know that aside English being a major language, we also have other languages that are very global. So have you guys considered the language barrier problems, and are you guys going to implement the?
Yeah, that's a great question. And as you mentioned, crypto is very much a global phenomenon. And while Cynthia is only in English at the moment, that is definitely a core part of our roadmap so that we can grow the access of this product to as many users around the world as possible. Fortunately, because of the wider development in the AI space, it's not the burden on developing that is not on us so much. Those sort of plugins and are already available, so it's just a matter of integrating and testing it so we're sure that it works well.
Yeah, thanks for just answering that question I just asked. I was just very curious about that. So back to what we were talking about. Okay, one more thing I also that just came to mind while you were talking about the how you guys just developed the aggregator into AI. It gets me curious on the finance aspect of the project, and you agree with me that that's a very crucial part of every project, because when the finance is not strong, it keeps the project as a purse. at a pause, sorry. So I really want to know, I'm not saying you should kind of disclose any personal thing because I'll definitely understand. But I'm curious to know how you guys are able to finance all of these developments coming in and out. Is it from like the trading volume, or is it from your personal, income? And maybe you could as well just walk us through your tokenomics, how these finance are structured in your tokenomics.
Yeah, that's a great question, and there are lots of avenues available to crypto projects to finance themselves nowadays. We so in order to be able to build out the full vision of what we needed to build out, we decided to raise VC money. So we've raised across a few different funding rounds more than $38 million. So we have top tier institutional investors such as Pantera, Polychain, Dragonfly, Standard Crypto, etc. That have invested in what would be the early stage development of futures and the protocol. Now, since we went live, we do generate trading fees, and so we, in addition to that funding, we also have the revenue that we've generated. In terms of the tokenomics, so we have we launched the F token back in December of last year, 2024. And the F token initially will have has the following utilities, right? It gives people skin in the game and voting power for the Synfutures ecosystem. If you also it gives you boosts for airdrops, and app holders will be eligible for a fee discount and also potential future rewards based on the amount and duration of their stake tokens. In terms of what would be the tokenomics themselves, so F has a total supply of 10 billion tokens, and 12% of this was unlocked at TG. In terms of the allocation,
Hi, Tony. I think we lost you. Hello, Tony. We can't hear you. I think it's the either Telegram or the network acting up. Okay, guys, let's just give a few minutes for Tony to reconnect. I think there's some issue
hello.
with his network. Okay, hi, Tony. I can hear you now.
My apologies for that. My Wi-Fi just cut out.
So,
But yeah, I was saying, so F has a total supply of 10 billion tokens, and 12% of this supply was unlocked at TG. In terms of the allocation, we really wanted to have a very strong percentage allocated to our community. So a total of 28.5% is allocated for the community. We also we did an initial airdrop when we did the TG, and so 7.5% of the total F allocation is also designated to airdrop.
interesting. Thank you so much for that. So I think the next part I wanted to talk about was about one of the partnerships I saw that you guys had recently, which is with Orbit Markets. And I see that the purpose of this partnership was to offer protection against impermanent loss. So could you provide insight into how this token-based product works and its impact on liquidity providers?
Yeah. So Orbit Markets is the partnership that we have with them is essentially a bespoke product. So large liquidity providers, if they want, they can engage us with Orbit Markets, and it works as an insurance, right? So essentially, the payout they pay out any impermanent loss that has occurred during the LP cycle. So for 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 more risk averse liquidity providers, this provides them with a solution whereby they can insure against impermanent loss on Synfutures.
Nice. Maybe you could as well just walk us through other partnerships you have. Because I saw that you guys are partnered. I think you already mentioned a few of them while you were talking about the finance aspect, right? So maybe you could just walk us through the kind of partnerships you guys are looking forward to. I mean, from the big large companies, there would be some projects who have similar utilities like what you guys are offering that are very good. Are you guys open to such partnership too?
Yeah, so on the partnership side, we've partnered with a whole different range of industry players. So on the wallet side, we've integrated and partnered with most of the large wallet providers, whether that's OKX wallet, Binance wallet, MetaMask, etc. And those partnerships then allow us to, more closely tap into their own communities and work closely with them. In terms of uh, other types of partnerships, we are constantly speaking to other protocols in DeFi to see if we can build out solutions alongside them that make sense, right? So, one of the examples of that is the SpotX aggregator. We obviously pulling liquidity from Aerodrome, and so we're hoping to build out more products that also leverage other solutions across DeFi in a way that makes sense for us. Ultimately, we're focused on building out what would be a one-stop shop for any trader to come in and trade
Okay, I think
exit on Synfutures. And so those partnerships are, a key part of making sure that.
yeah, thank you. I think your network keeps cutting out. Although I was able to get a bit of what you were saying, but it suddenly just got really bad. Um, but but you can hear me, right? Hi, Tony, are you there? Hello, I think he's having some connection issues. Guys, let's just give it a few seconds. Once he's back, I'll just ask, I think, one more question, and then we can move over to community questions. Let's just give it some few seconds for him to reconnect back with us. Okay. Tony, can you raise your hand? Okay, nice. Thank you so much. Thank you. Um, I know how this whole thing could get. Can you hear me now? You have to unmute your mic to speak. Yeah, you have been unmuted. You have been unmuted, Tony. You have to unmute from your end to speak. I unmuted you. I don't know whether it's network making it look like you're muted on your end. I have unmuted you. Hi, Tony, you're back.
I am back.
Yeah.
Apologies for that. I had the
I
Wi-Fi issues.
I actually unmuted you. I think it's just your network, just playing games, And Telegram can just be crazy sometimes. I just sent the speaker link in your DMs just in case it happens again. You could just join with that, okay? So I think let's just get you just get one more question from me, and then let's just proceed to community questions because we've fast spent time talking about everything. So I think the last question I'd like you to talk on is if you could just share any upcoming features or enhancements that Synfutures plans to introduce and how it aligns with the platform's long-term vision of democratizing derivative trading.
Yeah, that's another great question. So, on our side, we're always thinking about how to build out a full stack financial infrastructure platform, right? Now you've seen the initial sort of first product, which is Cynthia, which is an AI agent. But ultimately, we're looking to build out an AI framework so that people can do DeFi on what we like to call easy mode. So basically abstracting away some of the complexities of DeFi like interactions and simplifying on-chain trading. So the first, as I mentioned, the first like DeFi execution agent, Cynthia, is already live, but we envisage a world where there will be many more agents, and so we're building out a framework for that. In terms of the spot aggregator, we're going to be integrating what would be more venues, and really just building out also the number of pairs on the platform that are available for users to come in and either swap or trade on in terms of a pubs pair.
Yeah, thank you so much for going through that. So, Benova, you have been unmuted. You can ask a question now. Guys, please raise your hand if you have some questions to ask. I forgot to mention that just now.
Thank you very much, Moonshine, for the opportunity. Tony, I've been listening for a while, but I just have one question. I went through the website and I was trying to, look for the roadmap, and I saw that the last time that it was updated was in 2024, and we're in 2025. What do you have in store? I mean, going forward on the roadmap, so that at least investors will be able to follow and monitor the progress of how the Synfuture is progressing. I don't know if you get my question.
Yeah, that's a great question, and I didn't realize that the website was up to date. So I will thank you for pointing that out. I'll definitely chase the team for that so that you can follow the progress more closely. I'd say in the immediate future, the key metrics for us are to further build out what would be the number of pairs on the pubs platform, and also have better liquidity depth for those pairs, and then also really work on the AI framework that I mentioned earlier. So that means essentially building out what would be further AI agents so that users can not only use Synfutures, but use DeFi protocols in a seamless way. So, at the moment, if you think about your user journey, right, is you connect up your wallet to a specific dApp, and then you do what you need to do there, and then you move to another one, right? Ultimately, what we want to be able to do is create a very different user experience, which abstracts away all of that, so that you can just say to an agent, "Hi, can you do this for me? And I have these requirements." And if the agent itself cannot do that, it would tap into another agent that would be able to do that, right? And so we envisage this whole network of agents working in the background. In the more immediate future, though, we'll be also starting an affiliate program for people to basically grow the number of users on the Synfutures platform. And so we're offering some of the highest commissions also for affiliates as part of our program. And so, as part of that, we expect there to be some more significant growth, apart from the growth that we've already seen over the last 12 months since we launched.
Okay, thank you very much for answering the question, Tony. I get to understand everything. And thank you, Moonshine, for the opportunity.
Thank you for your question.
You're welcome. Thank you so much for throwing in that question here. So let's have. Okay, I muted Nadia. Nadia, are you here on the mic? You can ask a question. I can't see Nadia. So let's have OVA. OVA, you can ask a question. You have been unmuted. Okay. I don't know what's happening. I think Telegram is just weird. Solo, you have been unmuted. You can ask a question now. I don't know what's happening, like I said. No. Edward, you unmuted.
All right.
Okay,
Thank you very much. Thank you very much.
Can you hear me?
everyone is speaking at the same time. Okay, let's have
Yeah.
let's
So,
have
hi, Tony. Hi, Moonshine. So, my question, can you hear me? So, my question is, how does the funding rate mechanism ensure fair distribution of payments between long and short position, especially in cases of extreme price divergence, where one side is disproportionately affected?
okay, Tony, did you get the question?
Could you repeat that question, please? Because I cut out for me a little bit.
Okay. OVA, can you repeat your question, please? OVA, are you there? Okay, Tony.
Can I go with my question?
Yeah, ask the question again.
Okay. So, my question is, how does the funding rate mechanism ensure fair distribution of payments between long and short position, especially in cases of I'm not done. Especially in cases of extreme price divergence, where one side is disproportionately affected. Did you get it?
Yeah, I got it.
Oh, thank you.
Thank you for the question. So yeah, first of all, let's think about what are funding rates, right, in perpetuals contracts, right? So essentially, a perpetual contract the price doesn't always match a spot market price, right? And there'll be slight variations, and so typically, those prices do hover around the spot market price, but they're not the same, right? And so you can think of them more as like shadows, right, of spot market prices. So now, why does this happen? Essentially, the reason that they end up lining up is because of the funding rate mechanism. So what happens is that periodically fees will be charged to traders who push away prices from what would be the spot price, and they pay those to the opposite side, right? So essentially what happens is funding rates are preventing contract prices from drifting away, too far from spot prices. Now, what that means in practice is that if it's drifting away from, like there's an increased cost of maintaining a long position, right? If the derivative price has moved away significantly from the spot price, right? And so as a result, that will essentially dampen traders' enthusiasm because of the cost of holding that position open. And so some traders may decide to open a trade against in the opposite direction, or some traders may just decide to not open a new long position because of the fact that the funding fee is pretty high, right? And so the funding rate mechanism is really just that, to ensure that the perpetual contract prices maintain what would be a stable relationship with the spot price. Now, when it comes to Synfutures, right, it works slightly differently to centralized exchange because there are smart contract limitations that essentially prevent it. So typically in a centralized exchange, you would have scheduled funding payments, right? So in Synfutures, it's a continuous sort of funding which occurs, right? And so what happens is when a user trades, it triggers an update to the platform's funding rate, which as a result then triggers the collection and payment of those fees for all the position holders, right? And so this essentially allows us to do real-time connection of funding fees. So as if you hold a position for a long period of time open on Synfutures, on most derivatives venues, but on Synfutures as well, you will see that there's either you'll be receiving or paying a funding fee, right? And that sort of depends on where the derivatives price is versus the spot market price. Now, if you're thinking about asymmetric funding between like long and short positions, when a trader executes a trade on Synfutures, the LPs, essentially what they're doing is taking the opposite position, right? So if a trader is buying one BTC, then or putting in a trade for one BTC, then the LP is putting in trade for selling one BTC, right? So that means that unlike centralized exchanges, which don't necessarily have LPs like we do, the amounts that are paid out aren't always equal, right, on Synfutures. And so essentially the funding fee for the paying side equals the position value multiplied by the funding rate. And so it's then distributed proportionally among the recipients. But that's also based on like their position sizes, right? So, with people with larger positions will receive a larger amount. People with small positions. Does that make sense?
Yeah. Thanks for the well-detailed explanation. I really appreciate it. And sorry for the delay earlier on. Thanks.
It's okay.
No,
Thank
thank you for your question.
Yeah.
All right. Can I ask my question now?
Yeah, you can.
All right. Thank you very much, Mushan, for having me on the VC. Yeah, Tony, you've done a very great presentation, and I really need to commend you and your team for your project. It was very, very much well appreciated, seeing the needs-driven project that come up with. However, I have three questions on my mind that just one question would be that
Solo, we're finding it very difficult to listen to you.
All right, can you hear me now? Can you hear me now?
It's a bit better.
Can you hear me now?
Yeah.
You can hear me, right?
Yes. Now we can hear you.
All right. So, like I was trying to say, that my question is that I went on Megzi now, right now, to see your project, as it were, to want to buy a couple, and
Hmm.
I want to know, does you guys contract your listing, your sex listing, to market makers? Because again, many of the times, project owner tends to come on visits like this to tell us much about their stuff. However, they don't really mention about how that they've contracted their tokens for market makers to manage this across all the sex platform. I see like you have like seven sex platform that you are listed already. So is it contracted to market maker, and if it is, what is the agreement like as touching the price action movement of the token?
Yeah, that's a great question. So let's just think about what it means to list on a centralized exchange versus like a decentralized exchange. So on a decentralized exchange, you essentially create like a liquidity pool, and therefore and what is known as an automated market maker, the AMM, manages the liquidity, right? On a centralized exchange, because there's no automated market maker, you require a market maker to be able to list that token there. And so, any project that is serious, right, will have will be working with a market maker in order to be able to create the best trading environment for their token on the centralized exchanges, right? If you don't have a market maker, then the centralized exchanges, what they do is they offer their in-house market makers. But what the issue with that is that you don't necessarily end up having the same price across different venues. So, say for example, the token is on MEXC, but it's also on Bybit. If there's a large price discrepancy, then that's not necessarily the best trading environment for retail traders who are coming in who want to trade the asset, right? You want to ensure that the same price is the price is the same across different venues. And so, yeah, we do work with market makers, and we work with more than one. Again, in order to be able to ensure that users who want to acquire the token have the best possible conditions to do so, and also to ensure that because we're working with more than one, that we are in control of what's going on with the token. I can't go into the exact details of the agreements, as you can imagine, but that's essentially the way that we thought about it.
I hope that answered your question, Solo. Are you there?
Absolutely. Yeah. Thank you very much. Yeah, thank you very much, Tony, for that clarity, as it were. So, just a last question from my hand, Mushan. I want to know, because again, when we see projects like this and are listed, trying to solve the problem, they have deemed it fit at the onset that they are planning to solve, and providing the value that it were. Do you give room for innovative incoming based on the upsurging trending in the crypto space, as it were? Do you give room for that innovative concept, as it were? And then more so, do you give room for more platform to express your project to quite new audience? Because again, we are just entering into a phase of the crypto where new users who doesn't really know much about crypto are coming in. Are you positioned in such a way that you are able to harvest new crypto user to get acquainted with your project, as it were? And do you still welcome more platform like GoldDiggers to for interactive section with your project and with you, as it were?
Yeah, that's a great question. So on our side, we so a large amount of our users initially started out from the APAC region. So we have a very large presence in countries such as Korea. As we grow further, we're looking to expand at a more global level. And yeah, as you rightly pointed out, these AMA sessions with communities such as GoldDiggers are definitely a part of that growth plan. So we are very much looking to grow into different geographies, especially at the moment. If you think about one of the areas that we're looking into is Europe, because of the changing sort of MiCA regulation, means that decentralized exchanges are well positioned to capture that growth versus centralized exchanges, just because of regulatory requirements. So we're looking into that region, and also Africa as a region as well is very interesting to us, just because of the changing sort of market dynamics and also booming population growth. So we know that a lot of potential users will be coming online and hopefully will become users of Synfutures in the near future.
All right, thank you very much. Tony, that was a very great response from you. Thank you very much. I hope we could fully give you that platform where also we can become a referral for a project across boards, as it were. Thank you, Mushai. Thank you.
Yeah, thank you, Solo. Usually we accept just one questions because we have a lot of people who want to ask questions, but that's a pass for you since you mentioned earlier on that you want to get a bag. So do your research and see if Synfutures is something you'd like to invest in. Thank you too. Lastly, we have passed the time mark. So let's have Anderson as the last question of today. Anderson, if you have a question.
Yeah, thank you, Moonshine. Hi, Tony. Yeah, so I have just one quick question. So I want to know, how does Cynthia's smart routing algorithm optimize for the best prices across multiple dexes? Does it consider factors like slippage, gas fees, MEV resistance, and execution speed, to ensure the most efficient trade execution?
Yeah, thank you for the question, Anderson. So the Cynthia algorithm does exactly all of the above that you've just mentioned. So we'll essentially look into seeing, the end goal, right, is to, if I have 500 USDC, is to be able to give the trader 500 USDC worth, or as close to 500 USDC worth of ETH, for example, as possible. So, and that will include, fees, gas fees, right? So if you imagine if we're splitting the trade up into 10 different trades, then the gas fees are going to be higher than if we did it on 2 trades, for example, right? Gas fees on Base are considerably less than on Ethereum mainnet. So it's not as large of a concern as it would be on Ethereum mainnet, but just to give you an example. And yeah, ultimately it's splitting the trade into a way that makes sense so that the user receives as much of the asset at the end as possible. And so if you actually look on the front end on the swap aggregator and not on Cynthia itself, Cynthia actually uses the same underlying technology as the spot DEX aggregator that we've built out. So ultimately, the way we think about Cynthia is that it's just a different type of front end for the same underlying infrastructure in the back end, right? And we find that some users prefer, going to a specific trading platform and actually seeing, or be it like, your more traditional order book. And we found that some users really just prefer saying like, hey, I've seen this token and I want to swap it for this. And we found that Cynthia is a much better, let's say, front end for that. So that's a way that Cynthia's working on the back end.
Okay, thank you. That was clear enough. Yeah. So thank you, Moonshine, for the opportunity.
Yeah, thank you, Anderson, for jumping on the mic with that question. Thank you. So Tony, that's all the question we'll be getting. So guys, I saw some questions were also posted in the comment section across time. Still some people raising their hands. Please do well to join the Synfutures Telegram channel. Follow them on X. You can drop your questions there. I'm sure the team will be willing to get all the questions you have. So, Tony, before I close down the VC, I don't know if there was any part of the project we weren't able to cut across to, or there's something you just want to give you a chance to give the final concluding statement.
I think we covered everything. I mean, a very comprehensive AMA there. Thank you so much, Moonshine, for all the questions and also for all the audience questions. It's been really great from my side. And yeah, hopefully, you can follow our progress on Synfutures. I invite you all to follow us on our socials so you can stay up to date on our progress. And yeah, look forward to, if you do have any more questions that weren't necessarily answered, please do feel free to reach out to either me or Moonshine so that Moonshine can pass them on to me so we can get them answered for you. But yeah, it's been my pleasure to be part of this today.
Yeah, thank you so much. I was glad having you guys here. Despite how the market is at the moment, we know this is definitely affecting a lot of projects right now. But to see that we have thriving projects with real utilities is something incredible. And I just want to, give you guys some accolades. Shout out to you and your team for building such a very great utility project. So thank you so much. Bye, guys. See you
Awesome. Thank you.